If you have been watching the US debt clock, which is ticking higher and higher and higher, you know that we are in an uncharted territory. But the debt is now over $36 trillion. The big question is, how will the government handle it? Stick around in this video because we are going to break it down for you and talk about in very, very simple terms, what does it mean for you as an investor? Let's start with the basics. The US is spending more than what it earns, and not by a small margin. The interest payment on their debt is even higher than what they spend on defense. What is the problem? Well, the traditional fixes like raising taxes, what Biden and Trudeau's government has been doing in the past, or austerity, which means cutting spending, which DOGE under Elon or Trump is promising, as well as Pierre Poilievre in Canada also promising in his campaign. This may not work. The reason is the debt is too big. Many experts believe that the US will actually weaken the dollar to make its debt easier to pay off. So what does it mean for you? If you're an investor, you should pay attention to that. A weaker dollar means higher inflation. Everything that we buy in our daily life, goods and services, will cost more because now they are going to print more money to pay off their debt. So when they do printing, then the existing dollars will lose its purchasing power, which means rising asset prices. Stocks, gold, Bitcoin, even real estate is going to skyrocket. So all of those bulls who are promising you that the real estate will go back to 2014 levels, I'm sorry, that may not happen. And the losers are going to be the ones hoarding cash, either in fixed income assets like GICs or bonds. They're going to be crushed. Even though they will get some nominal returns of 4 or 5%, in real terms, it's going to be in negative growth. So why would the US devalue its dollar? Well, history shows this has happened in the past. In 1933, FDR confiscated gold and revalued the dollar. In 1971, Nixon ended the gold standard, causing the dollar to drop. And now the expert thinks 2025 could bring another major shift, possibly overnight, where the markets wake up to a weaker dollar and soaring asset prices. So why now? Well, the government simply cannot afford its current debt levels. Weakening the dollar makes it easier to pay off the debt, but it also pushes up the inflation. So how does Bitcoin fit into this? One interesting idea is for the US to have a Bitcoin strategic reserve, just like what they have with oil. Why Bitcoin? Well, it has limited supply, which means it cannot be inflated like dollars. And its value has grown rapidly, making it is a potential hedge against the inflation. How would it work? Well, the US could buy Bitcoin as a reserve asset. As Bitcoin's value rises, it could sell portion of that to pay off the debt, or it can use it as a collateral to issue more debt. Either way, they can leverage the Bitcoin price appreciation as a way to pay off the existing debt. This would lower their debt to GDP ratio without printing more money, helping stabilize the economy. But there's a catch. Bitcoin prices could also be volatile. That's why experts suggest that if you're an investor, you should diversify, put something in gold, in stocks, and of course Bitcoin along with some real estate, because real estate is also going to appreciate against the fiat currency. So what can you do to protect yourself? As an investor, I am keeping an eye on this. So I want to invest my money into hard assets like gold. Bitcoin are likely going to take a lot of potential upside because of that. And of course, I will keep my money into technology stocks like AI, quantum computing, anything related to cryptocurrency and blockchain. Short-term treasury bills, it may give you some nominal gains, but not in the long term. So anything that you have in the fixed income asset, try to stay away from it because that is going to be annihilated while the currency printer is turned on. So to conclude, the US debt problem is too big to fix with traditional methods like raising taxes and cutting spending. So ultimately, the dollar is going to lose its purchasing power even more. So they will print more money to pay off the existing debt. With that, the inflation is going to hit harder, and the assets like gold, Bitcoin, and stocks and real estate is going to skyrocket. And the US might even turn to Bitcoin Reserve as a hedge against the inflation and debt. Anyway, these are just my ideas that I wanted to share with you. If you like this video, give me a thumbs up and subscribe, and I'll see you in my next video. Take care. Financial education is very important for everybody, especially for the kids who are still at school, because when they grow up and go into the professional lives, if they don't know how to manage their finances, that is going to be a disaster to begin with. I have just published an ebook for the kids aging between 10 and 16 years to understand how they can manage their finances. So when they grow up, they know exactly how to manage their personal finances, because I have broken it down at a very, very basic level. What is money? How can we save? How can we invest? What is debt? How can we use debt? What is credit card? And how we can set ourselves for the financial future when we go into our professional life. So if you are a parent looking for a very simple to use ebook for your kids, click the link below to order the copy for your kids, and let me know what you think about that. Let's get back to the video. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.